SEC has been highly engaged compared to what was happening before. Before, it was just denying approval. And we just kept putting our filing in again, try, dogged and determined. And so here we are. We think we're first in line, and that's why there is this January 10th deadline. But we like the idea that the SEC has been so engaged, and it's not just with us, it's others as well. We think a number of funds could be approved at the same time. And they've been asking not only one set of questions, but follow-up questions. And again, that's a very good sign.
In 2024, the crypto market is poised to respond dramatically to the approval or rejection of the spot Bitcoin ETF, with the January 10th deadline acting as a potential catalyst for either a bullish surge in Bitcoin prices and other crypto assets, or an unprecedented crash. The direction of this price action will hinge on the decisions made by key players before the new year. ARK Invest has taken a proactive step by becoming the first to file its final Form S-1 amendment for its proposed spot Bitcoin ETF, ahead of the deadline imposed by the United States Securities and Exchange Commission. This move positions ARK Invest to be considered in the initial wave of decisions expected in January 2024. The SEC recently engaged in a meeting with representatives from 7 of the 12 spot Bitcoin ETF issuers. During this meeting, the regulatory body instructed at least 2 of the issuers to submit updated filings before the year-end. The SEC emphasized that companies failing to submit these final updates by December 29th risk missing the first wave of approvals anticipated by January 10th. While executives from companies such as BlackRock, Grayscale, ARK Invest, and 21 Shares were part of the discussion, the specific companies affected by the deadline remain unclear. ARK Invest CEO and CIO Cathie Wood sheds light on the ETF filings approval process and the SEC's stance, addressing the broader context of ARK investing as a company and the impact of inflation on its funds.
We're as optimistic about Bitcoin as we ever have been, but there are a few regulatory and tax uncertainties, and we had been waiting for the discount between GBTC and NAV to narrow. It was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally, and now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment. And it's just a moment of uncertainty between now, we think, and January 8th to 10th, somewhere in that range, perhaps. But we, out of an abundance of caution, didn't want to take any risk. BITO, the ProShares, is already approved. There's no regulatory uncertainty having to do with it. So we chose to maintain our exposure through BITO for the time being. And as I mentioned before, there are some tax and regulatory uncertainties still as part of this process. We don't know exactly who's going to be approved and whether they've met all the criteria that the SEC has put before us. We know we have, but we don't know if others, including GBTC, have. We just don't know. So again, out of an abundance of caution, and GBT's discount, again, it was as much as 50% relative to NAV. So not only have we enjoyed this year the run in Bitcoin itself, but we've had the nice closing of that discount. So it's been double good news for us. We are very happy that a couple of things have happened. That this idea that interest rates were going to continue moving higher has been proven incorrect. And I think even the Fed, while there is that small possibility, even the Fed is now starting to talk about the other side of the interest rate move. And so I do believe all we've seen so far is a reaction to that macro phenomenon or judgment call. We went through our flagship strategy, and all of our strategies went through a very difficult time from February 21 through December of 22. as interest rates, first of all, were presumed to move up or forecasted to move up. And then when they did move up, so it was almost like a double discounting. And so we've seen the first installment of the correction there to the upside for our funds with this notion. And it's, again, the forecast that interest rates will come down. And, we would presume that if they do come down, for the reasons we think they're going to come down, the most important one being deflation, then our funds will be in good shape because we are our companies thrive on deflation. Technologically enabled innovation is deflationary.
As the new year approaches, the Federal Reserve is embarking on a momentous shift in monetary policy, signaling an end to the nearly 2-year battle against high inflation. The shift was highlighted during the last meeting of the year in December, where central bank policymakers conveyed that signs of easing inflation are emerging. In addition to maintaining steady rates for the third consecutive month, the Federal Reserve officials have forecast a series of interest rate cuts for 2024 as inflation is expected to decrease more rapidly than initially anticipated. Cathie Wood weighs in on the topic of inflation and its impact on ARK investment funds. She emphasizes that the funds remain in good standing, and interestingly, she notes that a deflationary environment fosters a thriving space for technological advancement. Cathie's insights provide a nuanced understanding of how economic shifts can influence investment strategies, especially in the context of a changing monetary policy landscape. Let's delve into the details to explore this further.
We were very gratified at our asset retention in 21 and 22. In fact, we had net inflows, if you combine both years, of more than $18 billion. And this year, one might expect that those who averaged down into the very steep declines that we were seeing in 22 especially, might take some profits. So we have had, I know for our flagship strategy, it's roughly $500 million in outflows, maybe for all of our strategies, $1.8 million. So maybe 10% of the inflows that we enjoyed during 21 and 22. So again, we're very gratified and grateful to our clients for the support that we continue to receive.
So has the outflow stopped?
We have had days of, on balance, very recently, yes. And I think part of this is many people do tax management toward the end of the year. And so some of the outflows might have been associated with clients who got in at a high cost base and were just harvesting some tax losses. But I think we're through that. Actually, we put out a piece for Resolute, our distributor, who, and we basically showed to them, if you rebalance our strategy when there have been big moves one way or the other, if you rebalance regularly or based on a rule like when the fund's up 15% relative to everything else, take some profits. And what it showed, that study showed, that if you are disciplined that way, that over any rolling 5-year period, it is highly likely, almost 100%, I'm not quite sure if it's quite that high, but that you will beat the market, meaning as measured by the NASDAQ or the S&P, over a rolling 5-year period. And so a lot of our funds are with advisors who are very sophisticated and responded somewhat, perhaps in this tax management part of the year, to that message.
Cathie Wood's ARK Invest has initiated the purchase of shares in the ProShares Bitcoin Strategy ETF, while simultaneously liquidating its position in the Grayscale Bitcoin Trust. This strategic move, as noted by Bloomberg intelligence analyst Eric Balchunas, appears to be a tactical transition, utilizing funds from GBTC as a liquid tool to maintain exposure to Bitcoin while transitioning into ARK's next-generation Internet ETF. Balchunas views this move as a prudent decision, providing a boost to ARK's assets under management. In a Bloomberg TV interview, Cathie Wood, the CEO of ARK Invest, clarified that the decision to exit GBTC and enter BTO was made with caution. She highlighted BTO's existing approval and lack of regulatory uncertainty, making it a preferred choice for maintaining exposure at the moment. Analysts had anticipated this move, predicting that ARK would liquidate its GBTC position to shift assets to its Bitcoin ETF, which, if approved, would trade under the ticker ARKB. Additionally, ARK Invest continued its selling trend by offloading more Coinbase shares, amounting to almost 3.7 million shares this month. The selling spree included approximately 1.5 million Coinbase shares and over 2 million GBTC shares, facilitating a complete exit from the latter. Both ARK Invest and Grayscale are actively pursuing the launch of a Bitcoin ETF, each with its distinct approach. Grayscale seeks to convert GBTC into an ETF, securing a legal victory earlier this year. As both entities navigate regulatory landscapes, the looming question remains whether the SEC will meet the January 10th deadline for potential ETF approvals or extend it for further evaluations. Share your thoughts on this matter in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.